And the end of the music and the end of that disclaimer means we are ready for another 45 minutes of battle. Welcome to Trade Masters, the show where two expert traders collide. They bring their best picks, their best setups, their best trades. Sometimes these are short, sometimes these are medium, sometimes these are long-term trades. And then yours truly, at the end of all of the tally, decides which of these two gentlemen ends the winner for the week. And that disclaimer, I see that disclaimer. And did you know that Janet Yellen got a disclaimer to attend the meeting on GameStop? That is not a joke. But you know what will be a joke are the jokes that each of the contestants, the gladiators, bring to the arena. But before we get started, I want to see how everyone's doing. Our defending champ, Greg Holmes.
Doing well. Thank you very much. Glad to be back. Glad to have another challenger here.
And then Tyler Craig, who has won the belt many times. How are you doing tonight, Tyler?
Look, I've been licking my wounds. I've been plotting and scheming, and I'm ready to get back on top.
Well, listen, I break out my notepad every week because I've taken several of the trades that you and Emily and Cody and Gino have brought to this little show that we do. Before we get started, two things. One, I'd like to promote. We have a new little product we do on tackle trading. It is called The Huddle. It is the 5 storylines every morning that we find most interesting. And so if you want a quick news recap from the minds of tackle trading, because there's so much garbage out there, right? And so many things and this and that, the 5 things that we think are most relevant, you can go to The Huddle on tackle trading. Just check that out. We have that posted every morning. And before we get started, I have a joke for you.
Nice. Now we get to sit back.
Yeah, Greg and I will be the judge of that. We'll see if it's a joke. Right. What you got?
What did the GameStop customer service representative tell to the caller? Please hold.
Please hold. Nice.
I get it because he owned the stock and he wanted.
I think the CEO said please hold, and when they said no, he said you're going to hold anyway.
Please hold. All right, nice. Greg, as defending champ, you get to decide who goes first.
I got to defer to my friend Tyler.
Tyler, you're up. Round 1. Let's do this.
Okay. We've been doing this for so many weeks in a row. I feel like I can keep going back to the same setups now or the same stocks because they just keep giving us good patterns and good trades. I am going to go to the energy sector. Okay. To build the case here, crude oil has been rocking and rolling. The energy sector has been in the midst of a nice recovery. There's a lot of different ways you could play this. My favorite ETF for the space is XOP. And longtime viewers will recall that we did something on Exxon, I think, a couple weeks ago.
Well, you also recommended a naked put on XOP that expired worthless a while back. So
okay, I'm going back to the well. I will tell you why this is such a good ticker symbol. It has a ton of volatility, and that's not necessarily a bad thing because when you look at its options, it has a gajillion out-of-the-money strikes that have premium. It is not common for you to find a 28. This is Bed Bath & Beyond.
Hey, Bed Bath & Beyond has had its own energy lately, so
I'll bring up Bed Bath & Beyond in a minute. It is not common, let me restate this, to find a now $69 stock that has 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 strike prices out of the money that have over $1 in premium. And bid-ask spreads aren't too bad. Volatility is juiced on this. I think that this will continue to be a good cash flow candidate. I've used this thing for years. As long as oil is not going to negative prices, it's a good little vehicle here. I like the pullback earlier this week. We found support at this old resistance pivot. And unfortunately, it didn't wait for you. It was up 5.5% today. But I think it can continue the trend. And you can go pretty far out of the money in March out to say the 55 strike, the 54 strike. You can sell some puts, pick up some good premium. If you get a sign, you can buy shares, sell covered calls. I think with time, you'll make your money back. So I have a pretty high conviction level, and I'm willing to hold this if I get assigned. In terms of strike selection, Mark, I was looking down around the 10, 12, 14 strike price or deltas, I should say. So you got it over an 85% probability of profit. If you don't want to have a high cost, you could build a spread. You could do something like sell the 58, buy the 53. You're getting over a 10, 15% return. Or if you just want to sell naked puts, I like selling the 58 strike. You get around $1 and your margin 580. You might actually be better off with the bull put now that this has gotten so high in price. Scratch that. I need to do 100 divided by 580. 17% return on the naked put. In this case, I actually might just go with the bull put. That's the thing, Mark. Some of these stocks that were fantastic naked puts, you keep going and going and going. They get high enough in price where you start to consider bull puts instead. So, anyways, to sum up, 55 naked put or excuse me, 58 naked put or a 58-54 bull put spread. Both of those I think are good.
Listen, I like energy plays a lot. Now, directional plays, I love the cash flow plays on XOP or picking energy stock. That breakout on oil, oil got beat up in all the volatility, but as you pointed out, XOP found support. I like the naked put a lot. Thumbs up for me. Let's see if you get any thumbs up on your joke, though.
What do you call a dog with no legs? Doesn't matter. He can't come to you anyways.
See, the darkness reigns. The
Oh,
darkness
Tyler,
reigns.
like, oh.
The night is dark and full of terrors in Tyler's world.
Look, I've owned 2 dogs. Okay, I love dogs, but that was funny. Okay.
That was good.
Good trade setup, good joke. Round 1, Greg, you're up.
All right. You know what? I'm going for the McGregor left hand right on Tyler right off the bat here. We're going to Boeing.
Oh, interesting. I didn't see that coming.
Yep. We're going for the knockout punch. The left hand's coming. All right. So if you can draw me a trend line, my friend, from the top of that long wick at the top there, all the way down, catch as many wicks as you can. Thank you very much. That's good enough there. Yep. So this thing, obviously pretty deep, pretty intense pullback, really crappy earnings, and yet somehow it has mustered some life to it. What I really like most about this is the candle today was very strong, by the way, but it's broken above that upper channel line there. If you look at XLI is starting to recover as well. It had a bit of a pullback in the ETF. So we're finding some legs here. What I really like about this is the amount of run that I think we can get out of this. This thing actually floated down from 240 all the way to where we are right now. I think getting in above today's high price and below, if you just wanted to do a straight stock play, which is expensive stock, it's not the way I would go. But if you wanted to, you could just get in above the high, stop below the low, and Bob's your uncle. But the way I really like to play this is a diagonal spread, because I honestly think it's going to take a while. It took a while to get from 240 to 200, but I think we got a chance, especially with, it might have a few stopping points between here and 240, but I think over time you can float back up to there. And so I love the diagonal spread here. Buy the 60 delta call option, let's go to June, actually. Let's look at June. This might be a little more expensive. If it's too expensive for folks, depending on their thing, you could go shorter term, but it's going to take a little bit more management. So looking at about the 60 delta there, yeah, you're probably looking at 27 there. And then if we go sell 30 days out, go sell the March and sell what do we got there? I'd like to be selling. Can you go back to the chart for me for a second there, Ty? I'd like to get above the noise at 220 if I can. So let's look at the 220 and sell the 220. So that's going to be $2,200 cost there. That might be a little rich for somebody's blood. So if you're not happy with those numbers, obviously you can drop back to the March and make this a shorter term trade. So I think it was 44 days. June might be a bit far out, but the reason I like this as a diagonal is because I think that as we ran down over the last couple of months, I think we have the chance to run up that same way. And 240 would actually turn into a triple top. At that point in time, that's where I'd be probably closing out the trade.
Listen, I like that. We go to the weekly chart. There's an additional thing I like. And whenever I look at these diagonal spreads, the first thing I look at is,
No, I'm sorry.
just we had a clean bounce off the 20 weekly.
Amateur hour. Just a second, friends. Just a second. Go ahead.
Like comes down. I mean, once again, those deeper pullbacks, whenever I see a deeper pullback, and we were looking at one on run today in the halftime report, whenever a deeper pullback, oftentimes they'll pull back to the 20 weekly, those deep pullbacks. And then I like to see how price action, man, no fear at all. You didn't see price go below the 20 weekly. You had clean bounces both weeks off the 20 weekly. I think that leads a lot of credence to the diagonal spread here. Because once again, as Greg pointed out, might be a little choppy on the way up, might not be a clean directional play. But man, if owning the stock, selling calls, if you wanted to do that, the diagonal play, I like it. I like the June contracts. Listen, I love both trades, both completely different trades, both I think completely technically and sentimentally perfect. I don't know if your joke's going to be perfect though.
All right, well, it's Canadian joke, so we'll know it's good already. All right, the Canadian Park Ranger is giving some ramblers a warning about bears. It says brown bears are usually harmless. They avoid contact with humans, so we suggest you attach small bells to your rucksacks and give the bears time to get out of your way. However, grizzly bears are extremely dangerous. If you see any grizzly bear droppings, leave the area immediately. So one of the hikers asked, so how do we know if they're grizzly bear droppings? Asked one of the ramblers. It's easy, replies the ranger. They're full of small bells. Not quite as dark as Tyler's, but still.
Not dark at all. Not dark at all. Listen, two great trades. That is an even. Round one, even. I loved them both. Different trades, great trades. Round two. Let's begin, Tyler.
I'm going with a stock that has your name written all over it here, Mark.
Listen, suck up points are not going to be rewarded.
I'm not sucking up. I'm not sucking up. This is part of my pitch. Relax. All right. I say it has your name written all over it because it's got great technicals, and you're a man who I know appreciates good technicals.
Whatever.
Okay?
I've sold so many naked puts on Nicola the last 6 months.
Is this company still in business?
Look, not only are they in business, they have had a banner 2021. Okay. This thing's up. It's doubled at one point.
I know. I stopped selling naked puts because it got too high.
Okay, well, reconsider, my friend, because you just got some very nice constructive pullback price action here. Yeah. Look at the volume patterns, by the way. No pressure when it's pausing or pulling back. Lots of volume when it rips. No pressure when it's pausing or pulling back. Lots of volume when it rips. This most recent pullback has declining volume.
Wow.
Not a lot of conviction behind this. And then today is a trigger candle. You break above the prior day's high. Also, you had not above average, but you had a higher volume today than at least the last couple of days. This is a nice little bull retracement. I also like how it's reclaimed the top side of the 50-day and the 20-day moving average. So you're starting to see constructive price action. Now, that said, it's Nicola. So, I mean, it's got to stink about it. It is volatile. It is gappy. And so I want to do a trade where I have a very high probability of profit. And so, yes, I'm going to go back to the well with an out of the money put cash flow play here. So normally, if we talked about Nicola a month ago, I'd say forget it, right? But what emboldens and encourages me to do something is this constructive price action. And I believe the short interest on this stock is probably quite high. And I'd be scared to death if I would short this stock, knowing the backdrop and environment we're in right now with squeezing these high short interest stocks. So if we take a look here, Mark, I can go to March, and I would probably look to sell something like the 1250 strike, which is 50% out of the money. Maybe you do the 15 strike. If you're feeling adventurous, it's still a 10 delta. If I did the 15 strike for 70 cents, it's about a 50% return on investment. You do the 12.5 strike, and your ROI, a little less, 30, 40%. But looking at the chart, I think it's a pretty good bet if this thing doesn't crack 15 or 1250 for the next.
And I might be biased on Nicola. I mean, that volume pattern is beautiful, though. I love it. I mean, if this thing was anything not named Nicola, God, I mean, explain that volume pattern again. If someone's watching, because that volume pattern leads to so many good trades.
Well, if I could pat myself on the back a little bit, this is the same volume pattern from Bed Bath & Beyond. Okay. Bed Bath & Beyond right here, where you had this massive breakout on heavy volume. The prior two upswings had really good volume. And then it just paused. You had this little bull flag with light volume. Effectively, you have everybody jumping in on up days, nobody jumping out on down days. It tells you something about the sentiment surrounding the stock, how confident people are in the current trend. And if I bring this up, but look, Bed Bath & Beyond proceeded to go from $25 to $50. I mean, so I'm not saying Nicola is going to do the same thing, but it was that type of volume pattern.
That volume pattern is money.
See,
there's so many crazy things about the last year in trading, but volume patterns like that have been a constant for as long as I've been trading, for 15 years. I mean, when you see that volume pattern, it usually precipitates a good trade. Not always, because you can't pick anything 100%, right? But man, I love that volume pattern. I do. $15 strike down to support. I mean, do realize the only caveat with Nicola is that, man, it can get some negative news headlines that really drive down pressure fast. So I might jump out if I were to do the trade, because it's all there, like everything's there. If I had got a negative news headline, I'd probably jump.
Well, and you're 50% out of the money, right? So it's like they're compensating you for that risk.
You got lots of room to jump. It's solid. I get it. Let's see if I get your joke.
We'll see. A woman in labor suddenly shouted, "Shouldn't, wouldn't, couldn't, didn't, can't." "Don't worry," said the doc. "Those are just contractions."
Oh, Tyler.
Hey, that was not bad.
Your jokes, your Nicola. Who are you? Nicola, your jokes. I mean, I don't even recognize you anymore. I bet you I'll recognize Greg, because I know what Greg brings. Let's see what he brings here in round two.
I got to say something first. I'm getting a T-shirt made up here. It's going to say 2021, the year of bankrupt companies, brought to you by Robinhood. Because I'll tell you, all these insane companies going up, Nicola, GameStop, anything bankrupt, that's what they want to buy. Anyway, I find that amusing. But okay, let's take a look at, let's see what I want to bring out here. Let's go to Baba, please. Baba Black Sheep. All right, this is a pretty simple trade. I kind of like this a lot, actually. It's just a breakout trade. I love the 270 level here. You can see that it's building up it's past earnings, obviously, so don't have to deal with that anymore. The 270 level, we got a little bit of an ascending triangle happening there. There's a couple of different ways to play it. Like I said, the reason I like this is A, we're past earnings. B, that 270 level was important all the way back in August, right? August, September, it was important. It was important again in November as well. So this is what I like to call a key support and resistance level. It's something where things happen at this particular level. If we get above that 270, I think you've got some real, might not happen just immediately, but I think you've got some potential to get up to 300, 310, 320, even at the high there. Like I said, right now, the only thing that's holding this back is that 270 level. So a break of there, a couple of different trades you could do here. Depends on who you are, how aggressive you are, how conservative you are. Looking at the more conservative play would be a cash flow play, a credit spread below the 250 level. So if you go to the trade tab, Sir Tyler, and let's go out 30 days there. Let's go to March 5th. And if we can sell the 250 and buy the 245, You're looking at a $1.42 credit there for a $5 spread. That is big money, big money. Now, I would not place this trade until we have broken the 270 level. We're only at 263 now, but the ATR on the stock is $8.
So
Over
explain
$8.
the logic, because I understand, Tyler understands. Explain the logic of not placing the trade till you get the breakout signal.
Well, the reality is we're actually caught in kind of a little congestion right now. So even if you did this, we're at the top of the range right now. Okay, that candle today, it actually got a lot closer to the 270 level, but then it pulled back. So if you don't wait for the breakout, right, what you're subject to is a possible pullback. Well, that pullback is right around the 250 level, right? So even if it stays above 250, you're going to go through a punch of pain there, because your account's it's gonna look ugly, right? Well, it's been showing you that it has a pendulence to go from the top of the channel to the bottom, to the top to the bottom, right? We don't want to get caught into that. So the smarter play here, and don't get me wrong, there's lots of aggressive folks that will do this without waiting, but the smarter play here, the more conservative route, is let it break that resistance at the 270. Once you know it's beyond there, you might take a little less in that credit. So $1.42 on a $5 spread is decent money. Really, we're looking
What
for
strike prices were you using again?
250, 245.
250.
And that was 30 days out. So you could even go, if you were even more conservative, you could even go further down the road. But if you look at it, we usually want to get 10% of the credit, or 10% of the premium of the spread. Well, that's only 50 cents. We were almost 3 times that much, right? So like I said, you can wait, let this get above 270, throw that trade on. Yeah, maybe you only get $1 for it at that time, but that's still, in the neighborhood of 20%, return on a credit spread. So like I said, waiting for that break of the 270 level is very, very wise in my estimation. And believe me, I've done it both ways, right? But we don't know if this thing's gonna head back down to the bottom of that 250 channel, or whether it's gonna break out tomorrow. We don't really know. That's why we let the market come to us, right? We don't force the trade. And so this way, you don't force the trade, you let it break above 270, then you go in and throw that credit spread in. And like I said, your percentage return that you're going to get, your ROI is going to be massive, right? So that's the conservative way to go. The other way, that if you were more aggressive and you wanted to wait for the break of this, and you really thought it had some room to run, which I think, barring the gaps and things that were here recently, you could do a bull call on this as well, right? You could go in at the money bull call, go out up to maybe even the 300 there. So now I'd be looking to go further out on this one, maybe the March or the April. Look at the March for there. I'd go right at the money, say the 270, and go to the 300, sell the 300, because I think you can get there in that length of time. You're looking at $700 there. So again, if that risk tolerance is too much for you, then go conservative with the credit spread. So I think you got both ways to go there, and even the other way to do that too is, depending again on your skill set and your aggressiveness, do a couple of credit spreads to offset some of the cost of the bull call as well. As long as you understand how to to factor in all the risk or just those type of trades, you could actually use the credit spread to pay for a bull call. So again, it all hinges on that break of that 270 level.
Yeah, I love the bull put here on a break of 270. Love it. I mean, it's a great return. I like the space. I like Baba here. Jack Ma apparently has settled his beef with the Chinese government. There's some restructuring they're doing, so that risk is off the table. Really, really like the trade. Let's see if I like your joke.
All right. A turtle is crossing the road when he's mugged by 2 snails. When the police show up, they ask him what happened. The shaken turtle replies, "I don't know, it happened all so fast."
I bet you guys didn't know turtle is my favorite animal on planet Earth, and I love snails.
There you go.
Like Greg was like, what are my? Yeah, listen, Tyler, you're gonna have a hard time winning the show just because of how much I love turtles.
Rats! I knew I should have had a turtle joke.
All right, Tyler, round 3. Let's do this.
All right, so I am going to go to Zoom. And by the way, Baba was going to be on my list as well, Greg. So good thing.
You get no points. Yeah.
Hey, no crap. This is an AB conversation, Mark. I'm just giving Greg props, okay? Chillax. I'm going to go to Zoom. Zoom reminds me of what Salesforce has done here recently, where it was on top of the world. It's had a pretty good correction, deeper retracement on the weekly chart. I like the company. I've been waiting for signs that this thing was bottoming. Unlike some of the other high flyers where we're borderline chasing or riding the trend, this is a different type of play where you're just looking for it to come back into favor. You still got some time between now and the next earnings announcement, but what I primarily like here, Mark, is the higher pivot low that has formed, and you got a nice little high base. Today's candle tells me maybe it's going to take a minute to trigger, but once this takes out $400, which is a nice whole round number, I like playing this to the upside, just looking for it to kind of recapture some of the magic it had in the past. And I'm kind of using CRM again as my template. It had a similar deal again, was on cloud 9, had a bigger, longer term correction, recently put in a higher pivot low, had a nice little base and broke out this week and now looks poised for higher prices. I think Zoom could do something similar. And ultimately this just hinges on taking out that $400 level. From a strategy perspective, a million ways you could play this. I don't even mind just doing an equity play here, buying the stock over $400, just doing a breakout trade. If you wanted to make it more leveraged and lower cost, I would just do a bull call spread going out to probably April, or I'd probably do April. Buy the 400, sell the 430, something like that. I think this thing could catch a bid here if this turnaround continues. I also like the volume on the last upswing.
Yeah,
it's the first time you've seen accumulation coming in on this thing. And it hasn't given back an inch, and you really don't have any high volume down days over the last 2 weeks. So not a lot of distribution coming in either. So the volume supports a potential breakout as well.
We go look at the chain, see what that would cost me on an A.
Yeah.
And once again, contingent on the breakout, right? So it breaks 400. You don't front run this. You wait for the breakout.
Correct. Now, in this case, we actually don't have an April. I would be tempted to just do March. May is going to be a little bit slower than I probably want, quite honestly. So you do a March, you buy the 400. And again, you can control the cost depending on how wide you want to make the spread. The $30 wide is going to be $9. If that's a little expensive, just do the $20 for $6.50. You got a pretty good risk reward there.
Yeah, I mean, the risk reward is about the same on both of those, right? I mean,
yeah. It's just a matter of cost, right? Because you're basically paying $3 for every $10 spread. So you're 3 for 10, 6 for 20, 9 for 30. Yeah, it's not much different when you go from that 20 to 30.
I mean, and you can see how this could work out. You get a breakout, especially if it's on volume. I mean, for example, if you had some negative COVID story or just general momentum, right?
Yeah.
And so, quality trade setup, quality for those deeper pullbacks, how they get back to those highs. It usually starts a lot like this. How's your joke going to start though?
My wife, you need to do more chores around the house. Me, can we change the subject? My wife, okay. More chores around the house need to be done by you.
Well, for you English majors out there, that was hilarious. Actually like that joke a lot more than I thought I might have.
Nicely done. Nicely done.
Greg, go. Round 3, my friend.
All right. CRM is something Tyler brought up, and it's one I had on the list today. So I like this for a multitude of reasons. Basically, this little last pop there, these 2 candles there, if we get above those candles there, I think that's probably right around the about to 235 level there. As you can see, this was support way back in September, a little bit of failed support there in November, but held up again nicely in November, late November. So this is one, again, I keep going back to these key support, key resistance levels here. This is another one for CRM here. As Tyler had alluded to, I like the fact that it's, it's looks like it's trying to high base where it is now. It already high based earlier. Again, the volume pattern as again, Tyler, kind of stealing your thunder there, but no real big volume on any of the down days, just kind of working its way sideways, got a cup and handle pattern forming there. And what I like most about this is if this gets through this level, if it gets above here, I don't see it stopping until 265, 270. There's really a lot of rarefied air here. So I think you could easily get a $30, $35 run out of this thing, without too much trouble. Now, obviously it took a while to get through this. So again, the play I like most here, another diagonal, right? I want to buy the 60 and I want to sell some credit against it, because the reason I love these trades, okay, I've got one actually going in the rookie blog right now that's been fantastic. But the reason I love these trades is it gives me a lot of latitude to be wrong, and it gives me two things. It gives me cash flow and it gives me direction. Okay, and I'll take either one at this point. So let's say I get into this trade after it breaks, say 235. I get into this trade and it decides to just pop up a little bit and then go completely sideways. Well, I can sell enough credit between now and whatever my expiration is to offset some of the cost. So I'm not gonna be into this trade for a whole whack of money, but I'm gonna give myself the opportunity that if this explodes, I can roll up and out with my both my long and my short calls. Okay, so it gives me time to work with the trade. So if it meanders instead of exploding, which I'm fine with, it still works for me. If it goes up real quick, I'm good with that too, because I can take profits off of the table. It gives me all of these things. And again, if I'm wrong on the trade, I can use a stop loss to get out, or I can sell credit to offset my original debit. Okay, so again, this is another one of those plays where I think it's starting to recover now. It's had a bit of a beat down for the better part of 2 months now, 2.5 months. Now it's starting to work its way back up, and I like to play longer term to give it a little bit of room to run here.
All right, so I'm looking out at the Junes. So you're thinking the 230 Junes as the diagonal?
Yep.
And then
I wasn't going out that far just for cost wise. I like the Aprils myself. I think 72 days. Now, again, it obviously depends on the type of trader you are, but I like the 72 or even the Mays. So again, I'm looking at the 60 delta, and then I'm selling. What I like to do with these things is a little bit. I go a little bit closer. I'll actually do 10 days. I'll sell every 10 days, but that depends again on your commission structure, whether you're going to do that or not. Every 10 or so days, and then I'm going to try and get out beyond that expected move. So it's about $10 for that expected move. So I want to be out around the 245. I'd be selling around that 245 there.
I'll be honest. I'm loving your diagonal trades tonight, Greg. I really am.
If you do that every 10 days, you're going to collect a whole bunch of that credit back from what it's.
And I like that both of these candidates you have, liquid candidates. Stock's higher price, but that's why we have options to use those. They have weekly options, and the one thing that Greg writes a fabulous blog on our website, tackletrading.com. He writes the rookie blog. Another article will be out tomorrow. We release an article every Thursday morning, sometimes Wednesday night, right? But it is a great article. And Greg, you've been writing that for years, right? It seems like.
Yeah, probably 3 years now, I think.
And so there are a ton of past things. So if you are new to trading, and you want to, and what I love about Greg is he'll take you through different series. So different series in the blog. Sign up for a trial at tackletrading.com. 15-day trial. Go to the store tab at Tackle Trading. And if you're new to trading, go check out some of those series. Tyler writes some fabulous blogs on our website as well. We have all this education. We got these shows and live shows and traders lounges and weekends reports. Man, I think one of the things that we don't promote enough are you two's writing, because it's wonderful writing. It is as good as you will find anywhere in the world, and I just don't say that lightly. It's quality stuff. Let's see if your joke's quality, Greg.
All right, well, it wouldn't be me if I didn't have a bar joke. So Skeleton walks into a bar. The bartender says, "What do you have?" Skeleton says, "A beer and a mop."
All right, I'm going to need to hear that one again. Say this again.
Skeleton walks into a bar. Bartender says, "What do you have?" Skeleton says, "I'll have a beer and a mop."
Okay, I get it now. I get it now. I like your rookie blog a lot better, but I do get it now. All right, Tyler, I'll be honest. I'm loving these diagonal trades of Greg's tonight. You're up against it after 3 rounds. We got 2 rounds to go. What do you got? Round 4. Let's do it.
All right, look, I'm going to stick with what's been working here. I'm going to go with Bed Bath & Beyond again.
Ooh, so,
It is.
You know, I want to know who Tyler Craig is. I have a Nicola and a Bed Bath Beyond trade tonight. Who are you, Tyler? Who have you been replaced by?
I don't know. Wall Street Bets?
So, all right, let's see.
I want to see his Reddit feed. Let's see his Reddit feed. Pull that up.
All right.
Here's what I like about it.
And
Here's
that was
what I
a
like about it.
fabulous trade last, what was it, 2 weeks ago? Or
I mean,
3
we
weeks ago.
only identified it on January 20th.
Yeah, I mean, you nailed that. I mean, I remember that. And
So I nailed it, and then there were these people who didn't take the trade. They're like, wait, come back. We didn't get up. And so it's like, okay, I'll come back. So I came back. It's right where it was last time. This is a potential support zone. If you look at the entire retail space, XRT, for instance, as the proxy, this has come right back to the 20 MA. You look at Macy's, there are a ton of setups like this that have went parabolic with the whole short squeeze. They've come back down to their existing trends, okay? And so I feel like the fluff has come out of it, and now it's back to a more sane level where the previous trend and previous narrative can now come back into force. So I like the reversal candle today. I mean, this was up 10%. It doesn't look like it, but that's a 10% move. And the volatility is still sky high, so you can still get really good premiums on this. And so I was looking out to the 19 strike put. 19 strike put, you're $10 out of the money. I don't know what that is, 40% or something. And if you sell that 19 put for March, and again, if you look at this, look at it on a weekly chart for a second. 19 gives you a pretty good margin of error. You're almost below a weekly pivot. There was a lot of prior resistance in that area. And again, this has not been bid up entirely on this whole short squeeze nonsense. It looked good before that. Right. So if you look at it before all that nonsense, it had pretty good price action, was well into its recovery. And given what it just did, I think shorts should be thoroughly scared right now. So I think that helps carve a bottom in this thing as well. So you go out to March, sell the March monthly. You go down to the 19 put here. It's a 9 or 10 delta. You got a 90% probability of profit. You sell this puppy for, say, 50 cents. And they're making you put up 200, so it's 25% return on the initial margin. I think anytime I can get a 90% probability of capturing a 25% return with a setup like this, that's a pretty attractive trade in my book.
Yeah, I mean, do realize, I mean, this one, I mean, the volatility could pick up at any point. I mean, the math makes sense, right?
Yeah. Well, and again, my contention would be they're compensating me for the volatility.
The technical setup is really nice. Like, I know it's crazy. You'd be like, how could that chart be really nice?
Well, it's already come 50% off of its highs.
You know, like, but I like the old support level. I like that the chart on Bed Bath & Beyond was constructive. It got caught up in this. It's not necessarily one of the stocks that front and center in the controversy, one of the bank stocks. So I totally get it. Let's see if I get your joke.
The school phoned me today and said, your son's been telling lies. I said, tell him he's really good. I don't have any kids.
Nice.
That's a good joke. Let's see if your trade setups, Greg. That's good.
All right. All right, let's go to one thing I almost never trade, Netflix.
Oh, Old Money Holmes talking some Netflix.
Not Netflix. I hate this thing, but I do like the way it's looking, to be honest with you. So Netflix here, recovering a little bit, got a double top here from yesterday's candle. Today's, when I looked at this, it was this morning, it looked a little bit better then, but I still like it now. Got a little double top between yesterday's candle and about 5 days previous to that. Got a level there. What I like here is just a very short term credit spread on this thing. If you go to the February 19th, the monthly February expiration, so 16 days, just this is a quick hitter for me. I think, you know, you're going to get that break above that double top there. Going to the 500, doing the 500, 495. Now, I would not do this unless I got 50 cents out of it. Okay, that's our rule. We don't break our rules. I'm looking for at least 50 cents. If I get that, I'm below a couple moving averages there. I'm below a bunch of noise there, a bunch of levels of support. I still think that this thing's got a chance to work back up to that 600 range or 590 that it was at before. And if you look at it long term from left to right, it is making higher highs and higher lows, those pivots, right? So it's still working in the general trend direction that we want it to go. And so again, this is just a quick hitter. It's 15, 16 days in and out. And like I said, if you can get 10% in 15 days, that to me is a nice little quick trade.
All right, trade management. Because I like I mean, it's just a nice solid B bull put spread. Quick. I like the quickness of the trade. I mean, when do I get out? Like, when do I get scared?
So trade management, it's so hard with credit spreads, right? You know, if you break some levels there, the way I like to manage these things is if this thing starts to break down, I will actually throw on the other side of the trade. I'll turn this into an iron condor. I'll throw the bear call spread on and collect some more credit. If it then continues to fall and starts to break some of these levels, break the moving averages and things like that, then you can delta hedge it. You can short some stock. There's so many different things you can do. Now, if you don't have those skills to be able to do that, then what I tend to do with options is if it goes against me by 30% of the total, then I just close it out. But like I said, I really like the fact that, especially with a credit spread, if you do have the skills to turn it into an iron condor or take the other side of the position, that you can also do rolling, right? If it starts to get down a little bit, you can roll it out because, again, we're only going 16 days. So typically you're going out 30 days. If it starts to come down, you could roll down below that 500 level. And again, you've got some more support there. Even if you got down to, say, the 480, you've got a little bit more support there. So, but the reality is with this as well, you know, we've been seeing a lot of, like I said, a lot of higher lows and higher highs. You know, I think you're in good shape. Again, just pick a spot. You know, let's say that big red candle there, if it gets below there, if that's your tap out point, then so be it. If it gets to a certain percentage, you know, a loss against you, like whatever your pain threshold is, if it hits that pain threshold, close the trade. If you have the skills to maneuver it, you don't have a lot of time, by the way, that's the thing as well. 16 days is not a lot of time, but it does give you the opportunity to roll the trade as well.
Like it. Nice solid bull put spread, right? Nice solid bull put spread. Plus the sentiment from earnings probably not dead yet. Probably take a market correction to take Netflix down with it. Let's see if you can take down the audience with your joke.
All right. So, two men are adrift in a lifeboat for days. While rummaging through the boat's provision, one of the men stumbles across an old lamp. When he touches it, a genie comes forth. This particular genie, however, states that she can only deliver one wish and not the standard 3. Without giving it much thought, the man blurts out, "Make the entire ocean into beer." The genie clasps her hands and the entire sea turns into a brew. The other man looks disgustingly at the one who made the wish and says, "Nice going. Now we're going to have to pee in the boat."
I like that. That's good. Jokes are good. Yeah, listen, the jokes over the weeks, it's good stuff. Like good stuff. The jokes are so good. I need like I went back in the last couple of weeks to watch this show to fast forward to the jokes so I could get my favorite ones and tell my family them. Good, this good stuff. Listen, we're in what we call final round. This is round 5, final round.
Final Jeopardy.
Tyler, what is
Yes.
your last pick? Bring your best.
All right. We looked at Boeing. I'm gonna raise Greg an airline related play and go with American Airlines for a couple of reasons. Number one, naked puts have been free money on this, I think, for the last year.
They have.
And it's particularly been good if you don't chase. If you wait for a pullback, then it's good. The price action has improved considerably over the last couple of months. I'm particularly liking the kind of the response to earnings. Their earnings apparently was okay. The stock ripped higher. They sold it fine, but it came right back. It came right back and filled the earnings gap. And then buyers emerged. I like how the volume has retreated during the last couple of days of the pullback. You got smaller candles showing slowing momentum. You had an uptick in volume today, big bullish engulfing candle. This was up 6%. And if you look at the market overall today, it was momentum stocks were rocking today. So I think that this is going to have to do something incredible to just go down a ton from this point. You have just a lot of support zones, a trend line, 50 MA, 20 MA, prior pivots. You can still go down, Mark, to like the 13 strike put and get a pretty good premium on American Airlines.
How good a premium can you get?
Well, let me tell you, I'm glad you asked. Let's take a look at the March monthly. You go down to the 13 strike. You don't have to go that far, but you could. It's got a 12 delta. Let's say you get $34. They'll make you put up 130. The other thing is you don't have to put up much money on these. You're getting a 26% return selling a 13 delta. I mean, if you want to get a sign,
I've
you're going
been
to be long
doing
this
this
thing
kind
at
of stuff on
1260.
these beat up stocks for the last year, and it has cost me zero stress. Now, one thing, I have a specific cost. I never get put the shares, but I have a plan. If I do get put the shares, what I'm going to do.
Yep.
It never seems to happen, but one day it will, right? And that's why when you get put, you have to have a plan. You should never sell naked puts if you don't have a plan. I mean, that is so important. You should never sell too many. You should never abuse margin with naked puts. But man, if you learn those skills, it's been a good time. I've done this on American Airlines. I'll take this trade. I don't have one on American. I'll take this trade tomorrow, Tyler. I like it a lot.
Well, and it's like what would have to happen in the world in the next 44 days for the narrative on airlines to shift so suddenly that this thing gets slammed 40% from here?
I would love it to get slammed that much so I can actually implement my plan of selling aggressive calls, cost average down. It's a cash machine when you know how to do that. But it never gets put. So you take your credit and say, all right, I got some money. While you're doing your other trade, what I like about these on a few is that you can do your normal trading, right? I can be looking at diagonal spreads that Greg, I can look at directional plays, and then I have a few of these on the side. But just know what you're doing. Don't sell naked puts if you don't know what you're doing. I've seen too many new traders get blown up, but I will be taking that trade. I like it a lot. Thank you for reminding me on American Airlines. I haven't sold one in a while. I've gotten too many new toys lately. Let's see if your joke brings me as much delight as your trade setup did.
What's the difference between Iron Man and Iron Woman? The first is a superhero. The other is simply a command. Look, I say this somebody who is happily married. My wife gave me permission to give this joke.
There's no way she's listening to this.
I am not.
No, look, I ran it by her. I ran it by the boss. She said it was fine.
Ouch.
Yeah. Greg,
keep your head up, Ty.
Finish Tyler off here.
Oh, come on. That was funny. I love that joke.
All right.
Final round, Greg. Bring us
right. I've got a devil and an angel on my shoulder here, and I'm not sure which one to go. Let's go to AES. This is what I call a second chance breakout. This is the angel trade. So this was actually on one of our reports. I just happened to look at it again today. We were actually looking at this really nice deep retracement off, I believe that's the 50 MA there. Nice run up. You've actually got a nice opportunity right now. You've got a resistance level at 26 there. Nice quick hitter trade. You've got earnings in about 2 weeks, I believe, the 25th. So you're about, 22 days away. So about 3 weeks here. I like a breakout of the 26. It's a cheap dollar stock, so folks can get into it. You want to make sure that your second candle there, not today's, but yesterday's, make sure your stop's below there. I think you get a quick move to 28. This is over $1 ATR. Just a break of 26 in and out, easy peasy. There's nothing to stop you from getting to 26 to 28 very easily. Like I said, it's $1 ATR, so you can keep your stop just outside of that, and should be able to get a risk reward of 2 to 1 here.
All right, so let's say, because I hate taking breakouts when it runs into it. I know it hasn't as mattered as much in 2020 and 2021, but let's say it pauses 3 or 4 days, gives you consolidate before it breaks out. Are you too close to earnings to take the directional trade?
Like I said, we've got 22 days left before earnings, right?
So that's 22. I thought, okay, so we still.
Yeah, it's the 25th. The earnings is on the 25th, right? So it's the 3rd today. You still got 3 weeks, right? So yeah, if this thing goes sideways for a week, then forget it, right? It's a non-starter. But the way it's moving, pretty like it's a very linear move up right now. I would expect that maybe this gets a breakout in the next day or two. We're only 15 cents away from the 26 level anyway, so this would be one. This would be one where I would pick just slightly above the 26. I would put in a buy stop limit with my stop loss and my target already in there. This would be one of those set it and forget it trades. Obviously, make sure that you're done and out by earnings if you do get into the trade. So again, this was just kind of a real easy one, just lobbing it up there. I did have a short trade that I was going to throw out there, but I thought this one will be. I took the angel route instead of the devil route today. So.
Well, is your joke going to be angel or devil tonight?
It's pretty tame compared to what Tyler just said. Anyway, a poodle and a collie are walking together when the poodle suddenly unloads on his friend. He says, "My life is a mess." He says, "My owner's mean. My girlfriend ran away with a schnauzer, and I'm as jittery as a cat." And the collie says, "Well, why don't you go see a psychiatrist?" And the poodle says, "I can't. I'm not allowed on the couch."
I gotta hear that one again.
All right. A poodle and a collie are walking together. The poodle suddenly unloads on his friend. He says, "My life is a mess. My owner is mean. My girlfriend ran away with a schnauzer, and I'm as jittery as a cat." So the collie says, "Well, why don't you go see a psychiatrist?" And the poodle says, "I can't. I'm not allowed on the couch."
Got it.
All right.
Nice.
All right. This is a tough one tonight, because 2 trades I'm taking immediately tomorrow are XOP and AAL. And I'm going to take probably one of the BABA or Netflix credit spreads. I got to decide what tonight. Tyler, I'm sorry, even though I'm taking 2-year trades and you're going to make me money, I love those diagonal potential trades so much that the belt's going to stay north of the border for another week. Greg.
Winter is coming.
Baby, Greg.
Winter is coming. So.
Greg, do you have any, before you give your victory speech, once again, let me remind you about the huddle, our top 5 storylines, basically, so you don't have to, just what's happening that's important for the perspective of tackle trading, how we look at the markets, getting out the fluff. Go to tackletrading.com. It's right there, the huddle. We post it every morning. Check that out. And if you're new, once again, these 2 gentlemen write the best material. And I'm not just saying that as a salesperson. I'm a horrible salesperson. I don't know how to sell. I know how to run my mouth, but I do know good writing when I see it. And I do know good writing that can teach, and that's hard to do. And we got 2 of the best in the entire world in Tyler Craig and Greg Holmes. Go check out their blog articles. Options Theory, Tells of a Technician by Tyler, Rookie Blog by Greg. Sign up for that free trial. Greg, give us your final thoughts. Send us off.
Yeah, it's another good, hard-fought match. I love going up with Tyler, and Tyler and I do a lot of shows together, and it's great. We're brothers from different mothers, and I enjoy this a lot. You know what? For all of these setups tonight, actually, I've got a couple of those trades Ty brought. You know what? Honestly, the XOP, I love that trade. There's no question that
That's
I'll
my
actually
favorite
do
trade
that.
of the night. It was.
There's no question I'll be doing that trade tomorrow as well. And that's the beauty of this. And it's the beauty of our community, really. You know, we get to share with one another. You know, I get to share with you guys, and I get you guys to share with me. And you know, we every Friday we do the stock report where we've got 8-9 coaches all in the same room together, just sharing our knowledge, and we pass that on to you guys through the report. So you just don't get it any better than that. I've been a part of a lot of different things from a trading perspective, and you just don't get this kind of collaboration anywhere else than tackle trading. So I'm just blessed to be part of this. It's my life's passion. It's my life's work. I absolutely love it. I love the students, interacting with the students, and yeah, just make sure you're getting into the right trade setups. Be smart, as Mark talked about. You know, your position sizing is so important. If you do this, you're going to have a very long trading career. If you watch for the setups and you put yourself in the best position to win, it's really, really rewarding.
Well said. Well said. Everyone, we love you out there. We really do. Our community, you know, our community is the best. People looking to change their financial future without trying to make $1 billion today doing irresponsible things. We'll be with you the rest of our lives. Have a wonderful night. And there are a couple jokes there. I got to go tell somebody because there's some gems there. Gentlemen, thank you for your time. Everyone, have a wonderful night.
Thanks, everybody.